And I'm Bill. And we're the real estate agents of Miami. Welcome to another episode of the Real Estate Agents of Miami. My name is Bill.
My name is Donald. And today we're going to talk about how to build money for retirement using investment properties.
If you like this video, click on the bell at the bottom of the screen. Follow us on Instagram and Facebook, or give us a call. We'd just love to hear from you.
Investment properties are a great way to hedge against inflation because typically the value of the properties increase more than inflation. It's also an easy way to be able to put a little bit of money in and over time allow the property to actually pay itself off, which would leave you something you could sell when you get ready to retire, or it would give you even better monthly income if you kept it as a rental property after your retirement.
It's never too early or too late to start investing in real estate. Different types of properties offer different solutions and also different situations with regards to retirement. You can buy a single family home, multifamily, a large building. You can buy even a lot and hold on that for a long time if that's what you want to do.
And also try to look a little bit towards the future. If someone is trying to build for retirement, I don't suggest that they go to the happening neighborhood right now to buy a property. Try to guess where the next neighborhood is going to go. You're probably going to hang on to this property for a long time. So if you can kind of see a little bit into the future and you buy something that's in a little bit more of a marginal neighborhood, when it comes time for retirement, you're going to be very happy. Everyone's going to think you're a genius and like you beat the market.
So basically any type of property can be an investment property. You can buy a condo, single family home, multifamily home, even a vacant lot would work for different reasons.
All of them are going to give you a little bit different format as far as the way the return's going to come back to you. A single family home, you don't make a lot of monthly income off of the rents, but you do tend to make a little bit more capital appreciation, especially if you're listening to what we said and you bought in an emerging neighborhood. Because what would be a cheap home then, the homes will rise in value quicker than the commercial properties will. Multifamily homes, when you go to those, they can be as small as a duplex. They can be as big as hundreds of units. It just depends on your different position, the position you are financially. But what you're going to see is the more units that you have, the higher economies of scale you're going to have. A fourplex costs the same amount to cut the yard as a single family home does, but yet you have 4 apartments paying for that expense. Same thing with insurance, water, electricity, on and on and on. So, you're going to have a little bit of a economy of scale there. Don't worry if you only qualify for maybe a single family home, but you want to switch to something else later. We can always do a 1031 exchange, which we'll talk about in a subsequent video. You could then swap that property for a multifamily property and grow as you get closer to retirement. You could also buy a commercial property. Those are very good. You can usually find those in emerging neighborhoods rather cheaply. They become super expensive once everyone has arrived.
Condos are another situation. Quite often the monthly return on condos gets eaten up in the insurance and the monthly fees for the condo. Because in Miami, the monthly fees are typically very high. So you don't get a lot of return as far as
condos don't raise a lot in value in Miami compared to everything else.
So, and they cost a lot.
They cost a lot to maintain.
Exactly.
And then you also, you want to think about the fact that in addition to you're basically taking your small down payment, you're giving yourself a long period of time and you're letting your tenants pay off the property for you. So once you reach retirement, you're going to wind up with a property that's free and clear. And you'd be able to sell that if you wanted to. You could also turn around and just keep it rented, and therefore you're having less expenses and it's increasing your return over time as well.
And you have a monthly income at that point as well.
It's a great steady monthly income. People rent all the time, especially in Miami. There are always a lot of rentals, but they always rent.
So the best thing to do is to set a goal, start out. If that type of property is not what you want, there's opportunities to change that. We also have this thing in this area called an opportunity zone, and we'll get into that later in another video, but that would allow you to take all of those profits on the properties and actually get rid of any tax on those.
Exactly. You put them into one and then you hold the property for a long time and you're able to avoid all those taxes. Well, this is a good scenario to like kind of set you up and prepare you for investing in investment properties. The biggest thing is to get yourself a great realtor who really knows the market and can kind of see what's coming ahead. Because if they can kind of look to, as a vision of the future, they're going to lead you in the right direction to make a nice long-term investment that's going to pay off for you, and you're going to look like a genius in front of all your friends.
All right, that's all for today.
Thank you so much.
And come back to see us again. Bye,
Make sure that
y'all.
you click the bell at the bottom of the page if you like the video to follow our channel. You can also follow us on Instagram or Facebook. You can always give us a call or send us an email. Have a good day.
Bye, y'all.
Bye.